Good morning, traders. Scott G here with the Simple Trading Life. Welcome to our normal Tuesday, Friday YouTube live stream. And we will be getting started here very shortly. Give me just a second here to get things set up. Get everybody's comments up here. Hello to everyone. I think we'll have an exciting morning today. So let me get my screen share set up. Get over here to the market. See, we have a few of you on here already. I actually started a couple minutes early. Just had everything set up and ready to go. As you can see on my screen here, we already have ES up, and you can see what happened. We opened, we kind of shot down, then we spiked up, and then we've come right back down. Obviously, we opened right in an area of supply, but we'll kind of cover that here in just a few minutes. So we'll give folks just a couple of minutes to join us, and then we'll really get going. It's just now 9:45, and that's our normal starting time. And when we get a few more people joining us, I'm going to ask again. I haven't asked it since the very first one. What's the best time to get started? 9:45, the last time I asked it, which was during our very first YouTube live stream. I asked people to either email me or comment or send me some sort of message, and there was only a few people who did respond, but almost every single one of them said the same thing. They thought waiting 10, 15 minutes. Somebody I think even said waiting till 10, let the market kind of get going and then jump on. Made the most sense, so that's why we've been starting at 9:45, but I'm open to starting at any time. So if you guys can let me know, and I'll ask the question a couple of times during the live stream, because I know some people join us right at the beginning, some people join in later. Typically when we get done, I go back and look at the analytics, excuse me, and I'll see that we will have had quite a few viewers, but obviously at different times. So I'll ask that question multiple times today. I see a couple more people are jumping in right now. So we'll watch the market here together, and we'll go over a few things, and hopefully everybody will learn something. Possibly we'll see some trade ideas set up while we're live in real time, and maybe some folks can make some money. There's a few more people. Hello to everybody who's joining. So we're just letting people kind of get in here, and as you can see, we're talking about it. Here is ES, the market, the S&P. And what happened is when we opened right here in the middle of a supply zone. We immediately shot down, which made sense, right? Because we were in supply. Then we spiked up. Then we came right back down and actually went red again. And right now, we're just right around opening price level, which is this purple dashed line. So, okay. And give me just a second. I heard a message going off, so let me check my message real quick. I always like to make sure it's nothing important. So give me 1 second here, folks. Okay, I got it. Nothing important. All right, so let me bring your comments back up, and then we'll get rolling here. And as normal, we'll have people joining us as we go along. Okay, so what are we looking for here on ES? Well, let's scroll out. Let's look at the bigger picture. Okay, here's where we came from, right? We had this huge artificial ramp, right there. which we correctly called in the Simple Trading Life community that we would sell off from there, which we did. All right, let me scroll over, and we sold off down here. We created a demand zone. We went back up. Okay, we got right up here to this resistance level. We turned back down. We got this initial test of this newly created demand, and we bounced out of there, which makes perfect sense. All right, and then we reversed back down right here from the 20. We reversed back down, and then we started climbing. And from this point, which was 3:30 yesterday, so right before the end of regular trading hours yesterday, we started this climb, and we climbed all the way up to here, which the market went limit up. And limit up is just like limit down. In the overnight hours, if you go up or down 5%, the market stops right there and trading is halted. However, as you can see, these two little dashes, that just means that trading was halted right there. And then you notice that we moved down. So here's how it works. If your limit up, trading is halted other than going down. If your limit down, trading is halted other than going up. Okay? They put these protections in place to try to keep the market from, obviously plunging and with no way to stop it, or same thing, going up with no way to stop it. So anyway, then we went down, we came back up to that level, and then here's where we opened up this morning. See a couple more people joining us. Hello. All right, we just had an alert go off on AMD, so let's kind of see what's going on over here. Okay, the alert was telling us that AMD is coming into a supply zone. Okay, look at this huge gap up. That was something else we talked about this morning. I posted it, I think, in the premium room. We have a free chat room and we have a premium room in the simpletradinglife.com community. And this morning is one of those mornings where pretty much everything was gapping up. Okay, and as you can see, AMD gapped up significantly. Here's where it closed yesterday. Here's where it opened today. Opened at 44.03. It's already up to 45.29, and it's right up here to supply. And if we come over here, you'll see this ticker, $ADVNC. Those are the advancers. This number right now at 28.05, that is extremely bullish. However, it's a little bit deceiving because pretty much every name gapped up this morning. So unless, I talk about this every time just so you guys know, unless this price comes all the way back down and fills this gap and goes lower, it's going to show as an advancer. And so will every other name that gapped up. So unless they fill the gap and go lower, they're going to show as an advancer. Now what that means is, let's just give a hypothetical. Let's say price bounces here out of supply and comes back all the way down here to this support level at 42.85, right? That would be a pretty big move for AMD, but it would still show as an advancer. Even though the price action at that point would be negative for the day, for regular trading hours, it would still show as an advancer because it hadn't filled the gap. Okay, so hopefully everybody understands that. All right, so we had our alert go off here on AMD. We'll check back on it. I tell you what I'll do. I'll put a couple of alerts, which will let us know what happens. Okay, that is if it gets up outside of supply, and then I'm going to put one maybe right here under opening price to see if it reverses and bounces back down. Those of you who might be new, I am big on using alerts. I have alerts set all over the place. Typically, most of my alerts are letting me know when we're entering a supply or demand zone. All right, back to the market. I think the market is trying to go up. It is. Okay, went up. Come back down. All right, right now we're right here around 23.62. So let's set an alert up here. If it takes out the high that it's already created, we'll know. And same thing, we'll set one here at the bottom. If it takes out the low that it's already created, we'll have an alert go off. At or below. There we go. Okay, now either way, if one of those goes off, we'll know what the market is doing. Okay. Got a couple more people. Welcome to everyone. Let's just look at a few names. If we see anything interesting, I'll stop and kind of show you what's going on. Okay, here's Apple. Again, significant gap up. Gapped up to a nice area, which would be, almost 50% in between support and resistance. Why is that important? Because it gives it room to move either direction. As you can see, it opened up and actually shot down almost to the support level here at 233.67 and then right back up. Excuse me. You can see here where Apple came around and we had a demand area here, but at the close yesterday, it got into it. It tried to bounce. It couldn't. There was just too much selling pressure. And look where it sold down to. Clear over here. Actually, this is the last 2 days. Okay, so this was 2 days ago, and this was yesterday. Got all the way down here, finally bounced, and then today we gapped up here. So as we said, if we watch this advancer number, it's going to be high. It's going to be high today, no matter what. All right, so that's Apple. Let's go to Amazon. All right, Amazon, same thing. Big gap up, but in the middle of support and resistance, but you can see what it's done. Okay, it flushed down, came back up, and now it's going down again. All right, so here's one that has negative price action on the day. But again, unless it gets clear down here and goes below, it's still going to show as an advancer over here. Okay, so it's got some negative action on it right now. Does it make sense where it stopped? Of course it does, because this big wick right over here. Right? We always look to the left first, and we see what's over here to the left. You got this big topping tail and this spinning top here, long-legged spinning top. Okay, that showed us that right there, there was some significant selling pressure. So this morning it gaps up, and then so far it hasn't been able to get through this wick. Okay, so that's its first obstacle, as I like to say. If it got through there, it's probably going to be able to move up to this level over here, which is 1976.04. But right now it's moving the other direction. So might be able to get back down here to 1897.25 or possibly even lower. Then you have some moving averages down here. You have this as sort of like a congestion area, right? See this? So we kind of went rally, base, rally. Even though it's selling off, a gap is a rally. It's the best kind. So you have a rally, base, rally. So when it gets down to this support level, if it does, it should catch some support in there. All right, let's keep looking. We'll just go down through. Let's look at Aussie CAD. Okay, Aussie CAD, man, did it show some strength last night. So I was watching this last night. Got up here into supply, bounced down just a little bit. Actually, it bounced down a little bit more than that. And then it came back up, open, went right up through to the top. It actually cleared it, sold back down to the 20, went back up here to resistance, sold back down to the 20, and right now it's just sort of following the 20. So almost all the Aussie names had strength last night. I want to show you this. Okay. Here is the Aussie Swissy, the Swiss franc. So we came here, we came up, we did get more of a bounce here. It came down a little bit further on the first test of supply, then it went right up through it, pulled back down, went higher, came back down to this support level, and then you can see what it's been doing since then. All right, but again, you're going to see the theme here. The Aussie names had strength. Okay, let's go, well, let's take a look at Aussie JPY. Oh my gosh, the same thing, right? See this? Same thing. Now, it came, and again, first test, it pulled back, right? So high was 64.41, and then it pulled back to, let's see here, what was the close? 64.14. So that was almost a 30 pip pullback. Okay, so that could have been a scalp right there. But then it went through, poked through, came down, caught some support here to 20, and then just like the other Aussie names, you see the strength to the upside. And then finally, let's look at Aussie USD. Now this had a little bit different action. Okay, here was the strength up into supply, and supply held, and then supply pushed it down to here. All right, so from the high, which was also bouncing off of a trend line that was running through there, so from the high, which was 59.73, it got all the way down to 58.81. So that was almost 100 pips right there from supply down, and now it's bouncing back up. But I cut it off, right, because this is our initial test to supply. Actually, it was right here. This was our initial test, and we bounced. Let's see what kind of bounce we got there. 59.44, and it came down to 58.86. So again, pretty significant bounce. That would be 36 plus 44, right? Yep. So that's what, 80, right? 80 pip bounce right there on the first test. 80 pips, this is very, very nice, right? Very, very nice. And it came up in, still couldn't get through supply. Then we got this one that was almost 100 pips, and then it's been moving back up. Okay? And let's just keep moving through. We'll look at some different names. BA. All right. Okay, so here's BA. Let's see. I'll stretch it out this way so you guys can see it better. And then I'll move it up. And you guys will just be able to see it a little bit better. Okay, so here's BA. Okay, BA gapped up, okay, just like the market, gapped up right into supply. So somebody in our room was asking about BA last night, and no, I take that back. They were asking about another name, and we're going to get to that. But it was a similar situation. What happens if it gaps over supply? If it gaps over supply, that means there was not enough supply here to stop that. Because if there was enough aggressive sellers there, it would never gap over it. I hope that makes sense to everyone. Okay, trading that happens after hours is still trading, right? So when they come up to a supply zone, let me put it to you this way. Sometimes you'll see that a name, the market closes, and we're in after hours trading, and you'll see a name just really start to ramp. Then the next morning in pre-market, you'll see that it's come way back down significantly, and no news changed. You know, nothing, there was no negative catalyst out there. What happened? Well, in most cases, during the overnight session, when they were still trading it, it got into a supply zone, and then that knocks it back down. All right, that's what happened. Okay, I've seen that so many times. Actually seen it on a name that I was watching last week. So this name that I was watching, it got to the end of a day. It was sort of, drifting up. Regular trading hours closed. After our hours began, and within 30, 45 minutes, whatever it was, it had went up like a couple of dollars. I mean, it was going up. And I'm like, wow, this is, it's going up great. There's really no news. And then the next morning in pre-market, it was just sinking, and it sank like more than $2. So it went up about $2, and then it sank. Well, then when I went back and looked, okay, what do you think happened? Okay, there was obviously supply. It got up into it, and it knocked it back down. It bounced it back down. So let's go back here. Look at BA. Big gap up right into supply, which also happens to have a resistance level running through it. And what is it doing so far? Okay, so far it's selling off. Okay, so let's look. We'll see what the move has been so far. 126.20, and the low so far has been 118.16. So that's $8. All right, it's already sold down $8. So that's the significance of opening right there in supply. Let's look at BABA. Okay, BABA. Oops, I'm sorry. I had the wrong tool. You can't scroll in if you don't have the right tool. There we go. Okay, again, gapped up, tried to go higher, had some room to move, has come back down, and right now it's testing this support level at 180, 190. All right, see the gap up? And we're still up here in the 2800s over here, which makes sense. And you can see I haven't been on here. I don't have this extended over. I should. Let's do it right now. It should be over like this. There we go. Okay, so we came right up to it, sold away, came up, got into it, sold away again. Okay, now this is sort of rare, right? We had our initial test, we sold back, which was about $6, $5 or $6, which on BABA is significant. Came back up, tested it again, pulled back, tested it again, and really sold off. Look at this. From here, 187 down to 169. That's almost $20. Okay, but what I'm showing you, this is rare. You guys who've been here and who have seen this over and over again, typically you don't get that many touches into a supply zone before you break through. So we had 1, 2, 3, and on the third one, it really sold away. Typically, if you're going to have a big sell-off like this, it's typically going to happen after the first one, but not always, right? I mean, we still got a significant move. This is $5 or $6 right there. But look at this. That's like $18. Big move down. All right, that's BABA. Here's Baidu. Another China name, big gap up. Okay, right up to resistance. You see, again, it opened in the middle of support and resistance, gave it plenty of room to run, came right up here to the resistance level, bounced back down, and right here's where it's at now. So we'll see if it tries to get through there. Biogen. Okay, here's Biogen, gap up, again, in the middle, so it has room to run. Went all the way up to our resistance level at 283.34, sold back down, and right now it's just sort of flat. Beyond. Okay, so Beyond, as you can see yesterday, got up into supply and immediately sold off. Where did it sell to? The 20, which makes sense, right? Which makes sense. I don't trade Beyond a lot, and that's why my lines aren't drawn in down here. I'll go through and add a couple here in a second. But as you can see, look, our first touch of supply, it immediately sold off right back to the 20. Now today it's gapping up, and where did it gap up to? It gapped up into supply, but we'd already tested it, so now it's going higher. Okay, so really I should have this cut off like that. Okay, first touch, sold off to the 20 simple moving average, and then today we've gapped up. And let me just go ahead and draw some extra lines in. Kind of clean this chart up a little bit. Got to get my price line tool. Price level tool is actually the name. See, price level. And then we start at current price. We're marking the big moves or the sharp pivots. And let's see if I need to adjust anything. I can remove this line. Just cleaning my chart up here. We're going to bring this one down just a little bit. All right, I'm going to remove this one. Let's see here. Yep, I'm going to remove this one. We want bigger moves or sharp pivots. Okay, we're not worried about the smaller stuff. This is okay. This one's okay. I just need to adjust it slightly. There we go. Okay, this one can be removed. Should do this every 2 to 3 days. Doesn't have to be done every single day. Okay, remove. That one's good. That one's good. I'm going to remove this one. I'm going to remove this one. And I'm going to adjust this one. Just tweaking it there. There we go. Okay, turn my candles back on. There's my candles. Switch back to the 30-minute. And there we go. Now my levels are adjusted. Okay, now my levels are adjusted. They're correct. And we can see we've got room to move here. Okay, that's the gap. So right now, it's in a gap. Okay, price, all you have to do is look left here. Look left over here. See this? It's in a gap. Gaps will act as resistance until they don't. Okay, so you can see right now, you see how it's selling back? It's pushed up and now it's selling back. All right, now it could reverse. Or it could just keep making attempts and going a little bit further and a little bit further. And then once the gap fills, probably pretty easily you'll get right here to this resistance level at 73.26. That's once the gap fills. Okay, I see several more people have joined us. Hello. If you're brand new, make sure you give us a thumbs up, subscribe to the channel, turn on the notifications bell, and that way you'll be notified every time we go live or upload a new video. So welcome if anybody is new. If there's any name you want me to look at, any market, any commodity, whatever it is, if there's something you want me to look at for you, just type it in the comments and I'll go give it a little analysis. But right now we're just sort of going through random names. Well, I shouldn't say random. They're names that are in my watch list. Okay, so let's look at crowd. We'll go back to the market here in just a minute. Remember, I set those alerts and nothing's went off. So we're still in that opening range. Okay, so here we are on crowd. We're working our way up towards a supply zone. So let me set an alert. I need my alert at 59, really like 59.10 would make sense. Okay, set that alert. So that'll let us know if we get up into this supply zone. Okay, so crowd, as you can obviously see, even in this down market, what has crowd been doing? Look at this. Higher high, higher low, 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 and now making another higher high. Okay, so that just tells us right there, just based on structure alone, it is trending up even though the market has been trending down. Okay, so that's a name that you could very easily pick out because it's doing the opposite of what the market has been doing. Hello there. Okay, GBP USD. Yeah, let's take a look. Okay, that is a pair that I trade quite frequently. So here we are in the 30-minute, and what I'm going to need to do, give me 1 second. I'm going to need to put this over 19836. 19836. 19836. There we go. Okay, so move the supply zone over. So as you can see, we created some nice supply up here. We've moved away. Okay, we're sort of just chopping around, and now we're starting to work our way back. Eventually, and I already have the alert set, eventually we're going to get back here to supply, and we would anticipate a nice drop. Now, it's went lower than where we were the last time we were here. So let's add some lines below, if it makes sense, which I know it will. Okay, so we start at current price. We're on the 4-hour line chart. That's how we add our support and resistance levels. Okay, so one would go there. and one would go there. And that's it. That's really all we need to add. This one should be adjusted. It's probably been a couple of days since we adjusted them. All right, same thing here. This one needs to be adjusted. Just tweaked right there. Okay, this one, let's see where it came from. Doesn't really matter because it came from quite a ways back. We're going to leave it for now. This one's fine. This one we'll take out. We're going to remove that one. That's fine. That's fine. Okay, the rest of them are fine for now. Go back to our candles. Okay, that's our 4 hour. Now we go back to our 30-minute, which is what I watch and trade off of primarily. And now we draw this in. Okay, we're going to kind of see where price action is. Let's look here. Let me look. Nope. Nope, we don't really have anything there. Let's come back over here. Nope, because okay, see, we had an area here, but this was the bounce of that. You see that? Got up. We don't have it drawn in, okay, but here was an area, and we came right up into it. Here, let me do it for you. I'll make it easier, and then everybody can kind of see it. All right, so come back over here. We had a drop, base drop, and we would draw it in. Get my right tool, my rectangle. All right, it would look something like this. All right, and make that pink. I just make them pink. My supply is pink. I just use the same colors all the time. And my demand is green. All right, so we had this nice little level here. We came back into it. First touch, we sold away back to the 20. So this would be a level. Okay, and how I determine that, if this level here was taking out that level, then you do not draw fresh supply in. But because this level was taking out that level, that does make this fresh. All right, so I'm going to draw it in. I'll show you how you would do it here. Now typically when you get this strong drop away, you're looking for the first green candle. We don't have, the basing candle is red, but you see that it popped up here. So even though it's red, we would draw it just like this. You go to the top of that wick. I'll have to end up extending this across, so give me 1 second. Let me scroll back in, and I'll change it to pink here in a minute. Okay, activate, stretch it across. Okay, change it to pink. And this will be the next area that we would be looking for a bounce when price came up into it. All right, so if I scroll in a little bit more, the best areas of supply are rally base drops, or exactly the opposite, drop base rallies. Those are the best. Now you can, as you see, you can get supply off of drop base drops or rally base rallies when the moves are nice and sharp. So we had a sharp drop, nice base, sharp drop. That's what created this right here. Okay, if we come back over here, again, because this was not taking out this has already been used over here. Okay, that's why this is then considered a fresh zone. So if we get up in here, we're gonna look for a bounce. Okay, it could happen when it first touches it. It could happen when it gets up in here a little bit more. Okay, but what I'm gonna do is, let's set an alert at 187, maybe 4. Let's do that, 1874. Okay, so when price gets up there, I'll know. Okay, I should have put the note in. I didn't put the note, but I'll know. I always put like look to go short, look to go long. If it's a demand, I'll say look to go long. All right, so once it gets back up in here, this alert will go off. I'll see we're in a supply zone. I'll immediately scroll to the left. I'll see that it's fresh. This is our first touch, and we would expect some sort of bounce. And at that time, we would be looking for moving averages, for support levels, or for the next demand zone lower. Okay, and you always, when you draw on your supply and demand in, you're always starting at current price, and you're working your way down or up depending on where price action came from. So do we, as we work our way down, do we see anything significant? No, we don't. Okay, so what we're looking for, this right here would have been nice. Okay, rally, base, strong drop. Okay, the zone would have went right across here, and you see that? It touched it, and it did sell back. It sold back to over here. Then it moved up through. Okay, so if this would have been drawn in, okay, right here, all right, that's how it would have been drawn in, and as you can see, it would have barely touched it and sold back. All right, but none of this is really anything that you would want to draw a demand zone in. Okay, right here you would have. And as you can see, the very first time it came back and touched it, it led to this. All right, so if I draw it in, it would have been just like this. All right, I would have had it extended across until we touched it. You always cut it off after the first touch. But you see that? Okay, this is fresh. Drop, base, rally. So strong drop, base, strong move away in the rally. That creates good demand, a strong demand zone. We came up to the 20. We bounced back down. The very first touch we got, and look at this. It's already sold all the way up here. And probably will continue higher. Okay, we might see some pullback and then go up, but you see that? See how easy that is? All right, but nothing in here stands out as an area where we would draw a strong demand zone. So if it did come back and hits this and starts to bounce away, probably would be looking at the 20, unless somewhere along here we create demand, which is possible. Let's just say, let's say price drops pretty sharply, bases, then rallies up into this zone. Well, then that would create a demand level. We would mark it, alert it, and then we would get a bounce here and then a bounce back down. Okay? Okay, I'm glad that that helped you out. All right. So let's go back. We haven't been looking at it for a while. Let's look at the market. We know based on our alerts, it's not doing anything out of the ordinary, right? Because we put an alert above, an alert below. That's our opening 30-minute candle. So that was our opening range. This purple dashed line is our opening price level. Now price is trying to go higher, and if it takes this out, all right, if it takes that out, let's look and see what's above. All right, I need to extend some things over. So this would need to be extended across. All right, so we have some supply above, and we have this 24.1175 resistance level. So if we take this out, our next thing is to get over this wick here. We look to the left. Okay, we need to get over that wick right there. And then, okay, you see how these are lined up in a nice little diagonal fashion? That should actually help price. So if we get over this wick, that should help price accelerate it up here to this resistance level or even into supply. Cathal, I think is that how you pronounce that? Cathal? I'm glad that helped your analysis. Anytime, anytime. That's what we're here for. Okay, so again, if you guys look, if we take this out right here, then here's our next area that we would be looking at taking out is the top of this wick, right? Why is that important? okay, because that was where the sellers came in on this huge chaotic candle. Again, this was an artificial ramp, right? This was created by the government just continuously releasing positive news yesterday, and it ramped up here. And then the guys in my private simpletradinglife.com premium community, I had already told them it's not going to last. It's not going to last. And I kind of forecasted we would sell off. And as you can see, we sold off more than the initial move. Okay, we sold off all the way down to here. All right. Okay, so when you get an artificial ramp like this, and what I mean is this was all based off of news, where did it stop? It stopped right in a supply zone. It blew through this one. Now, this one wasn't the strongest, and I pointed out yesterday why. Okay, we just had this little spinning top. We did have a sharp move down in our base and then another sharp move down, but this little spinning top, if you would have had 2 or 3 candles or kind of a little bit more variety in there than just this little spinning top, probably would have been stronger. But even with that, all that news they were putting out, it drove it through there. But then when it got up this supply zone, it just sold it off way down to here. Okay, 2 reasons. It exhausted, for one thing. Whenever you have a huge chaotic candle like this, you're at a high risk of exhaustion, which means these buyers, they're used up, they're gone, right? They had to be super aggressive to make this move. So then they get up into a supply zone, and you have aggressive sellers up there, and now they're weak, the buyers, and they just sell it off. So that's why it was pretty easy to say that this was highly probable. Okay, so there's our alert. It just went off, and we're right here. See that? That means we took out the opening candle. So now, let's put an alert right here. And this will tell us if it takes out that wick. Okay, so that's what that alert is for. If we get up here and take this out, that means we're starting to get above this wick. And if we get above there, again, we look further to the left, we have 3 wicks in a row. 1, 2, 3. Now, if these were just all by themselves, okay, especially this one, I would look at it more like an obstacle. All right, but if we get above here and it kind of bounces us up, and then we get above here and above here and then above here, you see it starts to accelerate price, typically. When you have one big one all by itself like this, it tends to be resistance. So we gotta see what happens. We got above this one. Okay, that's showing some strength, right? Even though this was our initial candle, that shows that right there, sellers came in and drove price back down. We've got above it. Now can we get above this big one right here? So we'll keep an eye out for that. Okay, we've got the alert set. Let's look at some other things while we're waiting to see what it does. All right, how about Facebook? Facebook's a fairly popular name. All right, gapped up. And let's see, we gapped up just above support, pulled back. Okay, then we're going higher now. All right, Facebook's going higher. Let's see over here, the advancers are still very high, still in the 2800s. That number is not going to come down unless there's a significant sell-off by many names in the market. We had all these huge gap ups, and that's what causes this. Okay, right here, you see this congestion. If you go right to the top of it, that's what this would need to clear to continue going higher. And then you can see why that congestion's all there. Okay, see this little area right in here. Okay, so this congestion got right up here. And then that's why it went sideways, then sold off. So that shows you, now this is really a structure level, and I'll draw it in for you. Okay, what do we mean by a structure level? Okay, I'm going to make this gray. Whenever I draw in structure or ranges, they're always gray. I just try to keep my colors consistent. Okay, there was the structure. We had this rally. This is more than just a base. A base is typically going to be 2 to 3 to 4 to 5 to 6 candles. When you start getting more than 6, we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. We had 16 candles in here. That's not a base. That's more structure. Okay, so we rallied up, we went sideways, we sold off, we rallied up, came down, and now we're going higher. All right, but a level of structure on its own can act as resistance. So here on Facebook, they would need to get higher. Okay, let's go back. That was on the market, that alert that just went off. I think we're still going higher. Okay, so what we did is we got right up to the top of this wick, and you can see it's bounced us down a little bit. All right, because it's acting as resistance. Got right up to the top, bounced us down a little bit. Now, if it keeps trying, it may be able to get above it. If it gets above it, then it needs to get over this, okay, over here, over this, right there, then over this, and then we could see price get up here. Now, as of right now, let me tighten it up for you. As of right now, you see it's struggling. See that? See that line across there to the top of that wick? Went right up to it, bounced it back down, and as of right now, it's going red. Okay, because we know these were aggressive sellers. That's what drove this back down. Okay, so I'm going to reset this this alert. I'm going to reset it. And that way we'll know, okay, are they just taking some profit? That could be possible, right? Because we've had this move up. Maybe this is people taking profit because, hey, we got into a little bit of resistance. Let's go ahead and take a little bit of profit here. And then will it reverse and continue to go up? That's possible, right? Or is this just, again, an area over here where sellers are going to be more aggressive than buyers and try to push us back down? We'll know shortly. Okay, we'll know shortly. Let's look at some other names. Let's go to Roku. That was one that had some interest yesterday. And exactly what we talked about. So this was the one in the room that was asked about. So you see we have this supply area right here. Okay, yesterday, first time it had been tested, and it immediately sold down. I think we already checked this in the room. 90.44, and it got back down to 86.02. All right, so that was a $4 bounce down, right? Yes, $4 bounce from here to here, which on Roku, I mean, that's decent bounce. Okay, you can make some money right there. Then the question was asked yesterday, what happens if we gap above supply? The person asked me, would you expect it to then sell off, right? Because we had this supply area here, or would you expect it to go higher? And again, supply, if it gets gapped over, that means there wasn't enough supply there to hold it down. And we had already tested it, right? It's already been tested. So overnight, it gapped all the way up to here. This is where we opened today. It did come back down, bounce back up, and now it's going even higher. Got up near this resistance level and has pulled back just a little bit. Just a little bit. Okay? The bullishness, look at this. The advancers are even going up. It's up to 29.64. That's like unheard of. Anything over 2,000 is considered extremely bullish. This is telling you that almost every single name in the market is higher than where they closed yesterday. Okay, AMD, we just had an alert go off. So let's go back and see what we got on AMD. Okay, and there's our alert that we broke through the top of the supply zone. So we went up, got to here, sold back to right here, okay? So we did get a bounce, and now we're going higher. The bounce itself, 45.75 to 45.22, was only 50 cents. It was only 50 cents right there. You can see there's extreme strength in the market right now. Extreme strength. Huge gap up, and then it's still just it's going right through basically a supply zone. It did bounce, okay? It did bounce, and it bounced out of it, and now it's going higher. Okay, but there is extreme strength right now in the market. Okay, so that was AMD. Now let's go back. We'll finish up there on Roku, and then we'll look at some other names. Okay, so again, on Roku, it gapped up above supply. Now we have to actually go out to a bigger time frame. Let's go out to the 1 hour. Okay, there's the 1 hour, and I'll scroll it out just a little bit. Okay, so it's got resistance here at 102.23. Also have the 200 simple moving average moving down. That would most likely act as resistance as well. I'm trying to look if there are any supply zones that stand out. As of right now, I don't see anything that really catches my eye. Okay, now the reason this was supply is we had a sharp drop, base, big sharp, because we had the gap. A gap is the best, right? So gaps are the best, wide-ranging candles are the second best, and then medium-sized candles are the third best in terms of your drops or your rallies. So we had this, see, 1, 2, 3. We had these 3 medium candles, had a little base in there, but that's no big deal. 3 medium candles, that was our drop. Then we had our base, these 2 candles here. Then significant drop down, a gap. A gap is significant. Okay, so that's why we had supply there. Obviously, we caught the bounce, and then we went higher. There's nothing significant up through here. Okay, but we do have resistance levels. We do have the 200 SMA. Okay, so they could act as resistance. Supply and resistance just shows you where there has been either support and resistance. Shows you where there's been either support or resistance in the past. So it's one of the things that we trade because we know they're true. How do we know they're true? In this case, it's because they've already happened. All right, with supply and demand, we know it's true by the way it leaves a level. Okay, so you see this down here. How did we know this was demand? It came down, you see the sharp drop, right? This one candle is all your bases and significantly shot away. That tells us without a shadow of a doubt, it's true that there was more aggressive buyers than sellers in this area. That tells you that when it comes back to it the first time, sometimes more than once, but the probabilities are on your side on the first test when it comes back that you're going to get a significant bounce again. All right? It's not always going to be this big. Look at this. I mean, that's a huge bounce out of there. Okay? That's a big move to the upside. You're not always going to get that. Okay? Sometimes you only bounce up to your next area of resistance, which may be the 20, which may be this trend line. Okay? Which we did catch a little bit of resistance there before it moved higher. Okay? Everybody see that? Let's look at maybe like Netflix and Nvidia. So here's Netflix. Just trying to look at some more popular names that a lot of people trade. Okay. Let me go back to the 30-minute. I was on the hour because we needed to scroll to the left, and we may have to do that again. All right, so there was the gap up right here to this resistance level, and it sold off, and now it's just sort of hanging out in here. Okay, this is Netflix. See, Netflix, somebody was talking about this the other day. Netflix had been on a downward trajectory. Let's go to the 4-hour. Look at this. Okay, from up in here, see how it just fell away? All right, so we went from 393 all the way down to 290-ish, 290, 292. So $100 down, and now it kind of found its footing down in here, and it's been working its way back up. Netflix. Let's go to the 1-hour. Come over here. All right, we look back across. Does it make sense that we got resistance right there? You look to the left, it does, right? It does. And why do we know that? Okay, because we had this strong move up, rally. Now there's really no base, but then we had a strong move away. Okay, so we had a strong move up, really strong move away. That shows you that right in here, there was some aggressive sellers, even though we didn't get the base. Okay, up, right back down. That's like a sharp pivot, right? Up, right back down. In fact, that's why the resistance level's there. If we would switch this to a line chart, that's where you're going to see the pivot. Okay, so it does make sense that we came right up here and look what's happened. We've been selling off. Okay, so you don't really draw a supply zone in there, but that really is kind of supply. It's just a super strong resistance area right there at 369.21. And then above, okay, let's look here. So we would have had an area here, but it would have got taken out here. So then we would have another level here. So let's draw it in. Okay, rally, two candles together, sort of a base, and then we dropped away, and you would draw it in like this to the top of that candle. Bring it across, change it to pink. And remember, we're on the 1-hour right now. Normally I would be on the 30-minute, but I'm going to set an alert here. And would say, look to go short. This is what I typically do. Just type in a small note. And whoop, that's too high. Needs to be right there. Okay. There we go. All right, so if it gets up in here, that alert will go off, and I'll immediately look at seeing if we get a bounce to the short side. Okay, see we've had some people floating in and out. If you're new, hello. Nice to see you. We're just going through various names right now. Okay, here's NVIDIA. Okay, NVIDIA, big gap up strong, right here to this resistance level. Okay, again, does it make sense that it has stalled out right here? It does. If we look over here, we got a drop, base, drop, right? Drop, base, drop. So you would have a zone that looks something like this, right to the top of those two wicks. Make this pink. And there you go. Okay, so yes, it makes sense that it got here and right now it's bouncing. Again, we're seeing incredible strength. So is this going to be a small bounce and then try to go higher? Okay, then you're looking up here at the 200, then you have another resistance level up here at 261.42, which is the top of this right up in here. Or is it going to reverse and start heading back down? And if it does, okay, this could be a likely area, right? Because when you get a big candle like this, that means if it starts going the other way, there's not much there to stop it. Okay, let's switch over to a 30-minute. Okay, same thing on the 30-minute, right? There's your drop, there's your base, there's your drop. That's what created this. You come back over here. Again, if it would start this way, if. Okay, you could catch some support at the 200. Maybe it would come just to wherever the 200 is and then bounce. Or, again, it could go all the way through. Or it may pull back to this area. Okay, so you always know what your scenarios are. Have we looked at shop? Let's look at shop. Shop is always a fun name because it moves quite a bit. Today being no exception. Look at this huge gap up right into the middle of what was. This needs to be extended. Just to right there. Okay. You see where it opened up, spiked down. It probably actually went up first, up to this, spiked all the way down to the 200, and now it's trying to move back up through. So even though these look like small candles, if we zoom in, 423, 406, so what is that? 17? Yep, $17 candle right there. That range. That's why it says shop moves. That's what makes it fun. Shop moves. So it opened up literally right here under supply, went up into it, didn't clear it, bounced back down to the 200, and now it's been trying to go higher. It pierced out, but still hasn't really been able to break out and close above yet. Okay, so that's shop. Let's look at Tesla. Again, another name that people like to trade because it typically moves. All right, so you can see down here where we had supply, came down, came back up, bounced out of it, then went higher. All right. Hey, good morning, Grayson. Good to see you. Hope you're having a great day. We gapped up right above support, so let me squeeze this in. See where we opened? And then it went higher. Caught some resistance right here at a resistance level. Has bounced back down a little bit. So now we'll see, is it going to sell off or is it going to try to continue higher? Let's squeeze this in. We always look to the left. Okay, where are we at right now? Right now we're in a gap. And what did I say? A gap is resistance until it's not. Until the gap is filled, which would be up to here, till it's filled, it can act as resistance anywhere in the gap. Anywhere in the gap. Typically, the first 50%, if this is your gap, the first 50% offers the most resistance. Once you get over that 50% level, it usually is easier to continue on up and fill the gap. Okay, just like those are just little tips and tricks. So if this is your total gap from here to here, whatever the 50% mark of that is, and I'm assuming that's about probably 50%, that's why we're catching some resistance there. The first 50% is typically going to be more resistance. Once you get over that, okay, you'll typically go ahead and then move up fairly easily to your next level, whatever that is. Okay, so that's Tesla. You know, Tesla had the big sell-off all the way down to 350 from, okay, it's actually higher than that on the 30-minute. Let's go to the 4-hour. From 968 all the way down to 350, which you know, we pretty much called that was going to happen. Now it's catching a little bit. Let me scroll in. Okay, catching a little bit of support here. All right. Now, when would we say that Tesla is actually maybe back into an uptrend? Okay, once you get up maybe around here. So if you make higher highs and higher lows just a couple of times and maybe clear like this area up in here, then you could probably start saying, all right, we're trending to the upside. Okay, but if we scroll out, you can see what we've been doing, right? Okay, lower low, lower high, lower low, lower high, lower low, lower high. Okay, even though we've moved up, this is still a lower high at this point, right? We need to get clear back up over here to put in a higher high. Okay, we're on the 4-hour right now. Okay, you guys see that? Lower low, lower high, lower low, lower high, lower low, all the way down here, lower high. We wouldn't make a higher high until we got up above here. So that's why I'm telling you, until that happens, technically you're still in a downtrend. Okay, let's go to Twitter. All right, here's Twitter. Okay, Twitter came up into supply, sold back down, and now it's in a range. You guys see this? All right, now the supply stopped, right? Once supply has been tested, we cut it off, but we are in a range right now. Almost the same as our supply. A little bit bigger. So let's draw it across, because then we'll be looking for it to break out of here. You can trade breakouts, right? Okay, so this is the range right now. Down, here, down, back up, here, down. Okay, this is the range, this gray box. Now if we get a strong move to the upside or a strong move to the downside, well then you just start picking out your targets. Okay, if it was to the downside, then you look to the left, right? You look to the left. Could be some resistance right through here. Could be. Okay, left there in a strong fashion. But you could come all the way back down here, and then to the upside, squeeze it in. Okay, if we broke out to the upside, this would be your first level of resistance here. Okay, you see where you're at, right? Right now you're at 24.85. If you were up here at the top, you'd be at 25.85. So that's not quite $1. You know, you got to know, what does Twitter move in a day? A couple bucks maybe, right? Couple bucks. Okay, so that would only be about $1. Then it would be this wick right here. All right, and anywhere in there it could reverse, but you know, typically you'll get up near the top of it and then turn back down if you're going to. All right, so then you're looking at $2.50. Okay, so if you broke out to the top side and could clear this, then it probably makes it worth it if you can get up in there. And then if you could get over that, then you come up here to this next level at 29.30, which you also have the 200 simple moving average moving down. Okay, so that's how you would trade a breakout here. If you broke out to the bottom, you'd be looking to get under right here. And then if you did, you probably would come down to here, because see this big wick, right? You'd get into here somewhere. So if it broke out to the bottom and you were trading a breakout, target 1 would probably be right here. Target 2 would be slightly before you got to this level. If you broke out at the top, target 1 would be here. Target 2 would be somewhere up around the top of this wick. And if you're somebody that likes to have more than one or more than 2 targets, then target 3 could be up around here. Okay? All right, let's go back and take a look at the market. We haven't been up here in a while. We'll see what we're doing. Okay, so far, right, our alert never went off, so we know we weren't moving back up. So far, this wick has been resistance, which we said that's our first obstacle, right? Okay, so far, it's been resistance. And right now, it's selling down a little bit. Okay, this candle, 23.87 to 23.66, that's already $21. Remember, in this high volatility environment, right, this little candle looks little, but that's $21 already. Okay, we see stuff like this, but this stuff's not normal. That's not normal. Okay, normal environment, I said this on one of our very first live streams. I was watching a video from, I think it was 2015. This was a few weeks ago. I was watching this video, and this guy was doing analysis, and he was talking about scalping, and he was saying how when he scalped, this was in 2015, It's like, I'm looking for like a $3 to $4 move because our daily range is about $15 to $20. So what he was talking about there was ATR, average true range. So that's the total range that the market will move in one day. So back then, the total range for the entire day on average was $15 to $20. That's why he was looking for a $3 to $4 scalp. Okay. This candle alone that looks really small on this chart is $21. This one right here. Okay. How crazy is that? That candle right there, which looks small on this chart, was what the daily range was back in, like 2015 when that video was occurring. Okay. Right before the market correction happened, our daily range was around $44 to $47 a day. 44 to 47. And we thought that was pretty good, right? Because that was your average. So some days the market would move $60, $65, and then the next day maybe it only moved 30. But the average true range was somewhere around 44 to 47 before, and I'll show you what I'm talking about. Go to the 4-hour. Okay, up in here, right? Up in here. That's when our average true range was like around 44 to 47. And then, then we started the correction. And those in my room, again, if you're new and you don't know anything about us, you can go to simpletradinglife.com. And you can learn more about us. And we have both a free and a premium service. So we have a free chat room and we have a premium chat room. And you could join either one if you want. But those in my community, they know that right up here, I told everybody to be very careful. It felt like the market was starting to roll over. And I based that on previous price action. Because look, I've already taken it off. But there was a trend line right here. I took it off. So we were moving up this trend line. And as you can see, we kind of moved away. We got up to it. We sort of bounced. And then right here, if I drew it in, I don't think it'll let me draw it in on here. Maybe I can do this. Show you a little bit better. Okay. So you see this? From here over here was like an arc. And then we started heading down. So when we were right over in here, I was telling the folks in my room, I'm like, be careful. Be careful because we're way overextended. Everybody knew we were. We're way overextended and it feels, and I was basing it right on this action right here. And there was a trend line here at one time. So the trend line came right down through here. All right, we came right up and we just made this nice kind of arc. And we started to roll over, and I said, be careful. It feels like the market is starting to roll over. Now, and we've talked about this before. So like some of these candles in here, like this here, let's look at it. It was 32.46 to 31.69, so 70. All right, so this was like $70, right? This candle, yep, 46. So it was like $77 candle. And when these candles were originally happening, like this one right here, remember this 4-hour chart, when these were happening, people were losing their minds. They thought that was bad. Okay, and then what happened? Okay, let's scroll it back in, bring it back over. Okay, up in here, then what happened? They kept getting bigger and bigger and bigger and bigger, all the way down here to where down here, okay, if we go back and like look at this one, 23.86, $183 candle right here on the 4-hour, $183 candle. And they were freaking out over a $70 candle back when the correction had first started. And again, you just watch price action. It tells you everything you need to know. Put it in combination with support and resistance and supply and demand, and you got some pretty powerful tools at your disposal. All right, so we're coming back here, back to the 30-minute. And as you can see, again, we never were able to clear this wick. And right now we're forming an inside candle. We've got less than 2 minutes to go. Okay, what is an inside candle in case you don't know? The previous candle's range, here to here. An inside candle means that the entire range of this candle is inside the range of this candle. Okay, price can only move in basically 3 ways: up, down, or inside. Got that? Up, down, or inside. So if you get an inside candle, excuse me, if you get an inside candle, then what you're going to do is then you're going to see, are you going to take out the top or bottom of the inside candle? That'll give you an idea of what's going on. Is it strength? Is it weakness? You can do this on higher time frames. So let's look at higher time frames. Let's go to the monthly. We're still on ES. Okay, here's the monthly. Big time red, right? Big time red. All right, so if you are somebody who is a long-term investor, you're probably looking at monthly and quarterly charts. Maybe you add some weeklies in there, but if you're a long-term investor. All right, so then the next thing you would be doing, and I can almost guarantee you, unless we just continue to go lower, next month will probably be inside of this. Okay, unless we continue to go lower. But if you're a long-term investor, then you're looking at this range. When this month is over, okay, from here to here, you'd be looking for either the highs or the lows to be taken out. And if they are, then you have a trading opportunity in that direction. Okay, typically. Go to the weekly. All right, weekly is what a lot of swing traders look at. Here's the weekly. We're green on the weekly. Now you just saw on the monthly, we're this big red candle, right? But on the weekly, we're green. Now, we're only 2 days into the week, right? Today's only Tuesday, so really a day and a half. Okay, so we're only 2 days into the week, but you can see, here's our weeks. 1, 2, 3, 4, 5, starting our 6th week, and you can just see the progression straight down, right? We did get a bounce in here. And we did get a bounce right here. Okay, so this was all the way red, and then we bounced and ended here. And there were people, when this happened, who were saying, that's it, this is the bottom, right here. This is the bottom. And they thought everything was going to start heading up from there. Again, we cautioned against that in our community, and you can see what happened the next week. We sold off. Okay, so we're only 2 days into the week right here. And we are green as of right now. We are green as of right now. Okay, and we saw we were big time red on the monthly. Now we go to the daily. Okay, now we go to the daily. And on the daily, we're mostly looking at yesterday. We're green right now on today. Here's yesterday. So yesterday, oh, look at that. It's the top of that wick that we were looking at on the 30-minute chart. Okay, the top of that wick, you see, because that's what this alert is. The top of that wick, if we take it out, okay, we may be able to see some more action up to here, right? That would be our next target. Because we started here. This was yesterday's candle. That was the range. So if you take out the bottom or the top of yesterday's range, then you look and start looking at targets above if you take out the top. Let me squeeze it in so you can see it just a little bit better. All right, here's yesterday's range. We've been right up to the top of it, and then we've kind of pulled back. All right, it may pull back. It may pull back, and we may end up as basically an inside day. Okay, but if we take this out, then it's highly likely we get up to at least here. Right? But it could pull back. Okay, we had some good range there. It could pull back, and maybe we just end up as an inside day. And that's fine, right? That's fine. Now, we're swing traders, excuse me. scalpers and day traders primarily, and we do swing trade some, but let's go back to the 30-minute. So that's why we're mostly on the 30-minute chart. There's people in my room that like the 15-minute. There may be even a few that like the 5. I like the 30. All right, but you can see where we're at right now. Again, if I squeeze this in, make it easier for you to look at it, this is the top of that wick, right? And we just can't seem to get over it right now. So this is that range we were talking about, from here down to here. That was yesterday. That's why I have this marked, and that's why we have this marked up here. Okay, and we're looking from an intraday perspective, we're looking at ranges on individual 30-minute candles, or 60-minute if that's your thing, or 15-minute if that's your thing. I just like the 30-minute chart. But you can see here's where we open, this purple dashed line. We immediately sold down to the 200. We bounced up. We came back down. We went up. We tried to get over this wick right here. Couldn't do it. Sold down, and right now we're flat. Right now we're flat. Okay? And we may start moving back this way. So what I could do is I could take this alert now and move it up to the bottom of this candle here. This candle. Okay? So here we're looking to see, are we going to take out the bottom here? This ended up an inside candle. You see this? I said we probably would. See it? It didn't clear the top of this. Ended as an inside candle. Right now, we're trying to push down. Okay, we're talking about strictly price action right now. We're trying to push down. If we take out the bottom of this, where could we go? Well, we could go right here. We could go right here. Or we could even get down to the bottom. Okay, those would be targets. So if you take out the bottom of this candle, you could get to the bottom here where it opened. We could get back to opening price level, or we could get all the way back down to the bottom of the candle. So if you're a scalper and we just took it out, see that? We're now below it. We're now below it. Okay, so if you're a scalper, you know, somebody who's looking, now remember, on ES right now the premiums are through the roof. Okay, there are a few people in our room that are still scalping. One gentleman said yesterday he made over $2,000 scalping ES yesterday, but the premiums are really high, right? Or you can buy standard contracts, but on options the premiums are really high. So you have to be sure, like if you enter here, if you're trying to take a scalp, you got to have a very tight stop, so price doesn't go against you, because we can see, like right here, look at this, right? Started down. If somebody thought it was going to go lower and they went short, look at the bounce. Look at the bounce. That could crush you. That could crush you right there. Because what did we say this candle was? Opening candle, if I remember right. 78 minus 34, 40... like a $44 candle, $43 candle, this opening candle. Okay, so if you, when it was red at the beginning, when it was coming down here, if you went short and then it reversed like that and you weren't able to get out, right, you'd be crushed. Okay, here we go, real time. Okay, I just pointed this out to you. Real time, you can see what's happening with price action. Okay, coming down. Again, our first target would probably be right in there if you're scalping. Okay, right about there. And this, I should already have this pulled over. It should be over like this. Okay, there we go. Okay, so this would be your first target, your second target, your third target, if you want to have 3. Could it get down here and break through all of them? Absolutely. Could it get down here and reverse at any time? Absolutely. Okay, we're just talking about probabilities. Okay, now the revert, like if it would reverse somewhere in here, that would just be because strictly people came in and said, I don't want it going lower, and buyers get super aggressive and they push it higher. Okay, but you can see there's really nothing here that can stop it. And what we're talking about are like wicks. That's why I said this is your first target, because that's where the wick starts. Okay, once you get into a wick, if it's a medium to longer size wick, then that's an obstacle. That's something you got to get through. Okay. All right, we have our alerts set. We can look at some other things. Let's look at, what we haven't looked at today. Let's look at Euro USD. All right, let's look at Euro USD and just kind of see where we're at. Lots of people trade Euro USD. Okay, we've been selling off so far today, but are we, let's look here. Yeah, we're sort of breaking lower. You see how I know that is, I don't trade off of trend lines, but I'll use them just for context. All right, so if we draw it, actually I take that back, let me do this. Easier to go like this, and then we can extend it. So it can extend to the left, okay, extend to the right. All right, so we were trending up. We're sort of breaking below that now. We already knew that just by looking at it, right? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low. Okay, see that? Lower low now. Now we also have the trend line there to show us. Okay, the trend line also shows us. Again, I don't trade the trend line. I just use them for visuals. Hey, Derek. Nice to see you. Derek is in our community. Okay, so we're looking at Euro USD right now. All right, just giving everybody a big, broader picture. So we were, okay, if I scroll back, we were selling down, right? Look, lower highs, lower low, lower high, lower low, lower high. Okay, here we actually kind of almost double top there, but then we continued down, continued down, continued down, and then down here is where we started making the higher highs and higher lows, as you can see by both the structure and the trend line. But now we've broken below that, and we're right here at the 200. Let's scroll back in. We're right here at the 200, and as you can see, it caught some support there, but will it be able to hold? Okay, if not, then it looks like we would continue to drop, right? Okay, so we'll see. We'll see. But that's why I wanted to take a look at it. What are some other ones? Let's look at GBP, JPY. This is one that can get volatile, as you can see. All right, let me scroll in. All right, you can see I haven't cleaned this chart up. Let me do that. Let me do that. This is no longer a zone. We might as well just take it off and we can start all over here. We can start fresh. Okay, so where are we at right now? Okay, right here is where we're at. We're on the strong move to the upside. This is pound yen, JBP, JPY. We're on the strong uptrend. Okay, where could there be some demand on the way back down? Okay, this is an area that doesn't look too bad. Let's just make sure it's not taking anything else out. All right, we would have had an area here, right there. Yep. Okay, so this is taking that out. Let's make sure this isn't taking something out. Let's look here. Go back up. Right, here's current price. Really, it's going to be clear up here is going to be supply. It's going to be way up here. Whoop, I got the wrong tool. Let me get my rectangle. We'll draw this in. All right. See this? Strong rally up, base, strong drop away. Rally, base, drop. All right, so we want this marked. And remember, you don't want to force anything. You want the best possible zones. Okay, let me scroll back. I'll have to change this to pink, and I'm going to have to extend it across. Change it. One of the biggest mistakes that traders make is getting over aggressive. They want to take too many trades that just aren't there. Now let me scroll back in and make sure I got this right. Okay, the open on that was 131.60, so that's what I need to make this. Pretty close. Just eyeballing it, I was pretty close, 131.60. Then I want to set an alert. Okay, I'm going to set an alert here if I can ever get my Thinkorswim to work. There we go. And we're going to set it at 159, and we're going to say look to go short. All right, now let's zoom it back in. And now you can get a better idea of what we're looking at. All right, so to the upside, you see right here's where we left. Everybody see that? Okay, strong move away, strong move up, strong move down. So that's our strong rally, base, drop. We know they create the best supply zones. Strong move away. Now we're working our way back up. We have this nice slow curve pattern here. Okay, and we're kind of combining some things here, right? So I am a, let's say a candlestick aficionado, right? I don't just trade just strictly candlesticks, but I've done a lot of study on candlesticks over the years. This is what I call a slow curve. Some people call it a pot. Some people call it, you know, whatever. But what we know is that when you're in a slow curve formation and you come back up to your likely area of resistance, in our case that would be supply, you're likely, when you get up there at first, to bounce, and one of two things will happen. You'll either bounce and come all the way back down and test these lows, or you'll bounce and you'll create what is known as a cup and handle. So you'll come up here, you'll bounce down, and you'll make a smaller curve, you know, like this. You'll get here, you'll make a smaller curve, and then you'll go higher. All right, so either one of those scenarios would be good for us if this got up into supply. And it makes sense, right? Okay, we know that this pattern typically, when it gets back up to an area of resistance, will bounce, and it's going to do one of two things. It's either going to bounce all the way down and test these lows, or it's going to bounce down and it's going to come back around like this and then try to go higher. Either way, you can play that bounce. That's a high probability trade. Okay, so that's why we have it marked. This is GBP JPY. And then let's scroll back in and we'll look for potential demand. Okay, now this here, again, if I scroll back over, all right, what did we say? Is it taking that out? No, it would have been taken out right here. Okay, so what I'm looking for is to make sure this would be fresh. All right, so this, to scroll in a little bit. Okay, this, was it taken out? Okay, yes, right there. Right there. So this one's sort of questionable. It's just below this area over here. Okay, if the area you're looking at is taking out another area, you don't draw it in. You do not draw it in. But we are, this one is so close. It's like just below. It's just below. I tell you what I'm going to do. I'm going to draw it in anyway, and we can just watch it when it comes back down eventually. I mean, it may be a long time before it comes back down. So it would be something like that. All right. Now, again, this is a rally base rally. So we had a strong rally, a base, and a strong rally again. That's the only reason we would consider drawing this in the first place. The only thing that concerns me is we know that this wick took out this right here. Okay, so we had supply here. I'll show you. We had, okay, this was supply. It's just easier to show you than to try to tell you. Okay, that was supply. We got here, we bounced down, and then we went higher. All right, so we did take that out. Now, as you can see, the strength of this was incredible. All right, now somebody might say, well, really, you might say that that was the initial bounce. And it's possible, right? I mean, again, these are zones. They're not absolutes. Okay, that's one thing I want you to remember about supply and demand, because the zone shows us where strong sellers were before or strong buyers were. Okay, that doesn't mean they're buying at an exact price. Okay, understand that. So banks and institutions, anybody who understands how they buy and sell, because their orders are so large, they have to buy in increments. Right? They can't just take millions and millions of dollars and make one transaction, because nobody would be on the other end of that to be able to buy it other than another bank or institution, and most of them are trading in unison. You understand what I'm saying? Most of them are sort of on the same side. So this level right here, okay, it probably did. This probably led to that sell-off and then on up. Okay, because they may have had orders stacked starting maybe right in there, and then they're stacked up through here. Okay, different orders, and then they're trying to get them filled. And then same thing over here. You're going to have orders that could start just outside of this zone or just inside of it, and then they're stacked at different levels. Okay, because they're trying to fill lots and lots and lots of orders, but they can't do it all at once. They just can't have one gigantic order of millions and millions of dollars, or they're not going to have anybody on the other side to trade with. Okay, so hopefully you guys are kind of getting that. So that's probably what happened here, and then this was the sell-off, and then we went back through. Okay, so this, again, this area, it's questionable. It's questionable only because of this. But I'm going to leave it on there. I'm going to leave it on there, and I'm going to set an alert. Okay, 128.93. And that'll work. So we'll say below, look to possibly go long. For me, that'll tell me, hey, kind of watch it. You know, if it immediately starts to bounce, okay, go ahead, enter, put your stop down here. But if it immediately starts to penetrate in, then what I'm going to do is I'm going to wait, and then I would look to take it when it leaves this area. Okay, those of you who've been with me, you know that's sort of my strategy on this. If they hit here and immediately start to bounce, I'm in. My stop goes down here. But if they immediately start to penetrate in, then I'm sort of waiting unless I see like a hammer or some kind of buy signal inside of here. Unless I see that, then I'm waiting for the price to leave this area and head out. So a couple weeks ago, I had that one trade where it was like 173 pips. And those of you who, I think that trade, if I remember right, that trade initiated on one of the live streams. And if you guys remember, it did go into the zone, and it sort of rolled over, but there were several candles. Okay, now it was a downside move. So just imagine this is supply. It came up in, and there were several candles in a row, but they rounded over, and I told everybody on the live stream, if we exit and leave the zone, and I had sort of a level, I think I set an alert, I said that's where I would look to go short. Okay, not up in here, but when it left, and that's where I entered, and that turned into an amazing trade. Okay, so it doesn't always have to be that it just gets up here and the very first time it touches, it bounces away. Now that happens too, but it doesn't have to happen that way, because that big trade I'm talking about, it kind of came up in, and there was, I think, 4 or 5 candles in a row that were in the zone, but they were rounding off. Okay, they were rounding off. Okay, it felt like they were rolling over, and I said if it leaves, and there was like a little wick poking out, I said if it gets under there, I'm going to go short, and I did, and then it just sold off. Over the next like 2.5, 3 hours, I was able to collect 173 pips on one trade, on one day trade, which is just, it blows your mind. Okay. All right, so there we are in GBP JPY. Let's go back and look at the market. Okay, again, just not doing much, right? We've got our alerts set, just not doing much. Couldn't get over that wick, sold down, got down to here, came back up. Okay, we never got quite down to here yet, but you can see it just really isn't doing much. This candle here, 88.41. So this is basically like a $47 candle. This was like a $43 candle. I'm talking about the range from top to bottom. All right, so in the environment that we've been in lately, these are pretty tame. Okay, right? These are pretty tame. And I've seen a couple guys that I know that are professional traders, and some of them even run some rooms. But a couple of guys I know, they've been saying we're due at some point to have at least a day or maybe 2 or 3 days where we just get some, like, choppy, sideways, no big ranging candle action. I would agree with that. I mean, we haven't got to that point yet, right? People have been saying that the bottom was in and we were going to go back up. Those people are just kind of silly. But I would like to see that, because it would be good for the market if we got some ranging sideways action. It's not fun to trade, but it would be good for the market. So, like, let's go out. Let's go back to the 4 hour, and then I'm going to squeeze in here. Okay, so as you can see, anytime we've had any kind of a pop, we sell off. Pop, sell off. And then we kind of ranged a little bit, sold off, kind of ranged. We got this pop, sold off. We got this pop, sold off. What I would like to see, and that I think would be good, and I don't care if the market goes up or down, would be to see 2 or 3 days where maybe we're sort of in a range about like this. So maybe from like here to here, and just 2 or 3 days of that. The reason that's important, for those of you who may be saying, why would you want sideways action? Because it brings both players into the market. It makes both bulls and bears feel good. They both feel like they have an equal opportunity. What's been happening is every time the bulls think they have some kind of momentum and it starts going against them, they get out of the way, and then that's what causes these big drops. Okay, like here. Okay, that's what causes that. Here, that's what causes that. Okay, every time they've felt on the way down, and we can go all the way back. Look at these huge drops. Okay, move up, huge drop. Move up, huge drop. Move up, huge drop. So every time that they think they've had momentum, as soon as it starts to go against them, they just give up. Okay, that's not good, right? That's not good for the market. Okay, what you want, and I don't care if it goes up or goes down, what you want is both sides thinking they have a fighting chance. That's when a market is healthy. So that's why I'm saying it would be good for us if we had a fairly tight range for 2 or 3 days in a row. Gets everybody feeling good, gets everybody feeling like, hey, I've got a chance here, no matter what your bias is. And I try not to have a bias. I just trade the action. Okay, I just trade what I see. But that makes everybody feel good, and that's better for the market. Okay, we don't want to just see the market just keep constantly falling, right? We want to see some sort of, if you want to say relief, I don't know, if that's the right term, but you want to see some sort of action that makes the bulls feel like, you know what? Okay, all right, we're in this, okay? So hopefully that that resonates with you folks. Oh, I know what I want to do. Let's look at oil. We haven't looked at oil. And typically, for whatever reason, I haven't been looking at oil much when we're on these live streams, but I know a lot of people who trade oil. I trade it once in a while. Okay, so oil obviously fell off of a cliff a long time ago. When I say a long time ago, I'm being sarcastic. Okay, but you can see this is just the 4 hour. Look at this, how it's just been moving. Boom, big drop, boom, big drop. Okay, so this is already going back into January. So in January, which wasn't that long ago, we were up around $63. 63. Okay, we got down to a low of $20.52. $43 we dropped. All right. Now, if I scroll back in and let's go to the 30-minute. Okay, oil is volatile by nature, but oil has been crazy volatile lately. Okay, so let's look at this. See how we move, nice structure. We come up, big drop away, that forms supply. Okay, we'll eventually get back up there. Okay, move, strong move up right here. Let me scroll in. Okay, strong move up, base, strong drop. So we had our base, our rally, base, drop. That creates this nice, strong, fresh supply zone. Then what happened? First test, get over to it. Scroll in just a little bit more. I'm trying to get it all on the same screen so you can see it. There we go. Okay, we moved away, came down here. We actually have formed some demand down here. Came back, first test, what did we do? Sold. So this happened, let's look, 6 a.m. Okay, this happened at 6 a.m. I was up early this morning and I was seeing the media reports about oil rebounds overnight. Okay, so they're looking at this. They're looking at this move here. Like literally as soon as those reports were coming out, I'm like, oh, let me see what oil's doing. These are the oil futures, crude oil futures. So I flip onto this chart. By the time I got on there, this is 6 a.m. We're just hitting supply, and then look, sells it right off. So from here, just to give you context, okay, that was a high of 25.16, and we've been as low as 23.40. So that's a $2.50, is that right? No, that's not right. 64. Okay. What did I say it was? 25.16. All right, so 24 would be $1.16. And then 23.40 would be 60 more cents. Okay, so like $1.75-ish. Okay, to put this in perspective for those of you who do not trade oil, oil pays $10 per cent. Every 1 penny is $10, right? So just this move since 6 a.m. on one contract would be over $1,700. And obviously, if you're trading multiple contracts, you just start doubling, tripling, quadrupling, whatever you're trading. So oil is very volatile by nature, but it's really volatile right now. But again, if you know what you're doing, right? Okay, we know what we're doing. We knew this was a strong supply zone right here. Okay, this has been drawn in for a long time. Since it formed over here, you see I've already got these ones drawn in. Okay, we know that first touch, it's likely to bounce. Okay, first targets probably could have been moving averages, but it came down, came back up, and then it has went even lower. See this move? That's just structure, right? Lower low, lower high, lower low. Okay, and this literally happened as media was putting out reports. Crude oil rebounds overnight. Okay, because they see this. Okay, that's what they were calling a rebound, but they don't pay any attention. They don't know anything about supply and demand. They don't know anything about anything really. Okay, that's why you gotta take what they report with a grain of salt. So I see the report, I come over here, I click on oil, and then I see this. I'm like, oh, we just hit supply. I wonder where it's going to go. Well, so far we're clear down to here. Demand zone, let's see. Can you guys still see me? Somebody say yes or no. Can you guys still see me? It said that it temporarily disconnected. Okay, great. I'm just making sure you guys, I didn't lose you. Because I got a note there that it temporarily disconnected. It was just for a few seconds. Okay, so I put my alert in right here. Awesome. Thanks, Derek, Jose. Put my alert in, and I know if it gets back down in here, okay, we'd look for a bounce to go back up. And we'll know at that point, right? We'll know at that point where we're likely to bounce to. Okay, it might even be right here. Okay, because we have rally, base, drop, strong drop away. So it might be right there. Okay, I'll draw that in right now just so, because I'm here. So it may be up to here. Mark this for everybody. Hey, Derek. Okay, thanks for joining us, bud. Yeah, we're only going to be on here maybe about 10 more minutes anyway, so glad you could join us. Again, those of you who are on here, if you're new, if this is your first time, check us out at thesimpletradinglife.com. We have both a free and premium chat rooms, so you could join us in either capacity. And obviously on here, give us a thumbs up, subscribe to the channel, and click on the notifications bell so you're notified whenever we're on here. We're going to go about another 10 minutes or so. We usually go to at least 11:45, sometimes noon. Okay, so we're selling off, right, from up here, first touch, selling off. We come back here, that's a structure level, but it's also creating some supply. So if we come all the way back down here, and let's just say no other supply is created, and we hit this and we bounce, where is the likely target? Well, these are going to continue to drop as well. So you could say your moving averages, because they might be like somewhere over in here at that point, could be a target, because they'll frequently act as support or resistance, or all the way back up to the next supply zone, which right now is right here. Okay, that's how easy it is. But again, I always laugh because, like I said, I see the media report, I see it on Twitter. You know, I'm talking about the news wire. I'm not talking about other people. You know, it's like CNBC or Live Squawk or Market Watch or, you know, all those kind of things. And they're talking about crude oil rebounds overnight, and then I turn it over here and see that we're bouncing out of supply. They know nothing about that. So they put these reports out, and then like literally it's sold off since then. Right? Kind of makes them look silly, but they're just reporting what they saw. That's all. Just reporting what they saw. Okay, I see we lost several people, and I assume when it disconnected, that's probably what happened. And I apologize. I don't know what happened. It just said it disconnected for, like literally it was gone for about 3 seconds, and then it said reconnected, and you guys said that you could still hear me. So, but anyway, let's go back to the market because we'll be getting off here soon. So let's go back and see what the market's doing. None of our alerts have went off. Okay, so we're still right here. Okay, are we going to try to go higher, or are we going to get back up here? You know, what could happen, I'm not saying this is going to happen. What could happen is you get back up here, and if you keep rejecting, look what we would be forming, right? We would be forming a base, and then that would be a rally base, and either rally or rally base drop, right? So if it was a rally base drop, that would be a really nice area of supply. Really nice. Okay, if it's a rally base rally, okay, you could say that maybe that forms some demand. But we'll see. We'll see. Right now it hasn't done anything. We went up to it, we sold back down, we're coming back up to it again. Are they going to be able to get through, or is it going to reject again? We'll know here in a little bit. We'll know here in a little bit. Okay, folks, I'm going to go ahead and wrap it up. Like I said, we lost about half the folks there, and I'm sure what happened was when it disconnected, a lot of people thought that either I was getting off or that it wasn't going to come back on. But thank you so much for joining us again today. We'll be back on Friday. YouTube is free. We do these every Tuesday and Friday at 9:45 a.m. And I told you at the beginning I was going to ask again, if anybody wants to let me know, do you like doing them at 9:45, or is there another time you would prefer to do it? The reason we selected 9:45 was because of feedback from the viewers. The viewers said they like to let the market get started in the morning for a little bit, 10, 15, 20 minutes, and then do these live streams. But I'm open to doing them at any time. If you like 9:45, let me know in the comments. My email is simpletradinglife.com. Scott@simpletradinglife.com. You could email me, or even better yet, join our chat room. Join the free chat room. Check us out there. We also have a premium chat service as well, and just let me know there. But anyway, thank you so much, everybody. Thank you for being here. We'll see you on Friday, 9:45.